All right, good evening, everyone. Good evening, Tommy. Good evening, Tunji. How are you guys doing today?
I'm great. Awesome to be here.
Awesome. Doing well.
Great. We would like to see your videos, sir. Let's know how you see and then feel you know.
I'm putting on some makeup. Give me a second.
Tell me, are you also putting on a makeup?
Oh my God.
Light, camera, action.
Oh my God.
Right. This is nice. Just how's business been like? How you guys doing?
Oh, I thank God. I'm grateful.
Okay. Tell me how you doing.
Doing well.
I guess it's pretty busy at your end.
Yeah. And then the whole fuel scarcity thing has just, on this Lekki Expressway,
no.
It's just created a mess.
Oh,
literally,
no.
I was stuck in traffic for 4 hours today. So.
Oh no!
Yeah.
Oh no! Well, I have a not too popular opinion around that, but it's not something I want to dwell on today. I think they should just allow the thing. If he wants to get to 1,000, let it get.
Same.
If you want to get to 1,000, let it get. We would survive. It will make a lot of us reassess our priorities. Basically, that's what I think. When we live on this sort of unreal economy, it has a way of blinding us to not just reality. It also blinds us to opportunities. So I believe they should allow that stuff. It's long overdue to happen, but it's not a popular opinion because Nigerians will come for me after now. So guys, that's my opinion. Don't crucify me, right? So today we'll talk about how to make money and how to save money, right? Not how to spend it. Okay. So we're just going to talk about how to ensure that whatever you're earning, you're able to, maybe make more from it by investing in securities, that stock, which is Tommy's forte. And then Tunji is going to talk to us about pensions as founders. I just have to say that typically today is not one of those usual days because we had an event earlier today. We just ended a couple of minutes. We had an event that ended at around 3 o'clock actually, but as a matter of this thing, we must do this, and so we have to do it. We had a broader regional event that we participated in. Okay, so people are going to be a bit slow in joining, but it's being recorded and it's also being streamed on YouTube, so people will always watch and follow up. So let's just feel free. So guys, if you're here, just use the chat room, introduce yourself and let know who you are. If you're streaming on YouTube, please let us know who you are and where you're joining from. I will read out some of the things I have if you let me do that. So Tunji is back. Tunji's makeup is done.
Yes.
Okay.
I have adequate powder now, and all the things.
I can already see that. Hi, Peter. Welcome. Peter is joining. Desayo is joining from Dallas. So is this your colleague? Aki, welcome. So is this your colleague, Desayo?
Sorry, I was on mute. Yes.
Great. I thought as much. Hi, Desayo. Welcome. Great to see you again. Okay. Let me see. All right. Let me just check the people on the. I'm checking the YouTube so I can read out people on YouTube if we have. Guys,
Uche, can we also get the YouTube link so we could
so just go to
maybe?
startup. Just go to startup channel bit.ly/startup channel. bit.ly/startup channel. All right. So there you have it. bit.ly/startup channel takes you to the YouTube stream. So you can join us on YouTube if you are unable to join from here. All right. So guys, today, like I said, we'll discuss securities, investing, pensions. So Tommy, I'm going to allow you for 10 minutes to just share your thoughts around the topic, around securities and investing. And Tunji, you do the same, and then we'll then come back and have some back and forth Q&A, and then take questions as well from the audience. Is that fine?
Yeah.
Great. So, guys, I'm going to just read out. So I'm going to introduce the speakers. Today we have the privilege to have Tommy Solanke join us on today's session. Tommy is the CEO for Trove Finance. He has over 5 years experience in business analysis, development and operations, building, working with advisory and advising early stage startups. He's a graduate of chemical engineering from University of Lagos. Tommy is an alumnus of Tony Aluminum Foundation and Young African Leaders West Africa Initiative, as well as LEAP Africa. So Tommy, welcome, and thank you for joining us today.
Sure. Happy to be here. Yeah.
Great. The next speaker is Tunji. Tunji is the CEO for Our Bar. He's the founder and CEO of Our Bar, which happens to be the first technology access provider for micro pensions. Financial literacy advocate, macroeconomic thought leader, and an award-winning media personality. Tunji, welcome.
Thank you very much for having me. Really appreciate this.
Great. So I'm going to let us have, Tommy, I'm just going to let you take the stage now. So you just talk to us about what you do, what Trove does. Tell us the opportunities in investing in securities, especially from the Trove point of view. So let's see, so that because people are here to learn, to understand how it works.
Yeah, great.
Right.
Great. Thanks, Uche. Thanks for having me. My name is Tommy Solanke. I am the CEO, co-founder at Trove Finance, which is essentially a technology-powered platform, mobile and web, that allows Nigerians invest in local and foreign financial instruments. So think stocks, bonds, ETFs, from as little as 1,000 naira locally, and as little as $10 globally. So you can buy stocks of like amazing companies like the Googles, Facebook, and the likes, and also invest in ETFs from popular providers like the Charles Schwabs, the Vanguards and Fidelities, and then you can do the same thing here in Nigeria. And so that's a brief overview of the business, or what I do currently. And Uche, should I jump into
Yes, just go on right away. Go on.
All right. So for me, there's no presentation or anything too fancy today, but I would just pretty much speak through what equities are, and how to think about investing as a beginner, or as somebody that is an intermediate in the space, and just pretty much give you pointers on how I tell people to do it and how I do it myself. To give more context into the word stocks, stocks essentially it just means like you own ownership in a business, right? So if you're registering a business with the CAC, they will tell you, for example, your share capital or the structure of the business is, a million shares at X, Naira, or X Naira and Kobo per share. And so you can structure that however you want, but essentially the piece of the entire pie makes up the whole business. So regardless of whether it's a small business with, 1 million share capital, or whether it's a much bigger business with, 10 million shares in it, or, whatever, that number looks like, a company or a registered business is composed of actual units that make up the entire entity. So for the context of this, we'll talk about publicly traded companies. You can think of stocks essentially as, pizza, for example. The pizza is the entire company, and then the slices of the pizza are, fractional, or people that own tiny units in that, business. So you could buy one piece, you could buy two pieces or two slices, you could buy three slices, or you could buy the entire pizza. People that, the Jeff Bezoses, the Dangotes own like a majority of shares or stocks in the business. And so the net worth that we know today is attributed back to the ownership in that business. So back to what I said, the description, stocks, shares, people use it interchangeably, actually represents ownership in a business. And how do you, first of all, trade stocks? You have to go through nowadays there are technology platforms, but typically in times past, it was solely done through stockbrokers or brokerage firms. Nowadays there are technology platforms like Trove, for example, that pretty much cut out a lot of those interactions and just pretty much offer you a digitized process. You download an application, you complete a KYC process, and all of that is, completed whether like within a 24-hour timeline. You fund, and then you could, buy shares, or you could own parts of these amazing companies. I think of stocks or stock investing as opposed to the technical way people think about it. I think of it more from a perspective of ownership of a company, right? And so the question I usually ask myself is, if this business were, my friend's business or my sister's business, or, somebody close to me, would I give the person money to fund their immediate needs and take, 25% of the business, or 10% of the business, or 5% of the business? And that somehow sometimes shapes my thinking around, whether or not, it's a good thing. So I try to, take away all the glitz and all the hype, and then, ask myself that, okay, if, this were a smaller operation, or, is this something that fundamentally makes any sense to me? There are different ways of digging deeper into that that I'll speak about later. But the first thing is just pretty much, does this business even make sense? And does it even make sense to own a fraction or a portion of the business? So that's how I think about it. The second thing is like, how do you trade? Primarily, there are lots of apps that do that these days, that democratize the concept of investing. So you could buy, 500 Naira, you could buy 1,000 Naira worth of shares. You could buy $1, you could buy $2 worth of shares these days. Outside of that, the next question is, people ask, how do they pick stocks? I tell them, first things first, as a newbie or as a beginner, try not to pick stocks. And the reason why I say that is because, we live in an age, for example, where a lot of people do things like algo trading, you know, using algorithms and stuff. And then the system, there's a lot of analysis that goes into picking companies, especially in the short term. And so what I advise people to typically do is to pick something we call ETFs, or that's how I think about investing, especially as newbies. ETFs essentially are, you know, what it means is an exchange traded fund. Forget the technical term or forget what, you know, however complicated it sounds. On the US exchange, for example, on the NYSE, you have something called the VTI, you have something called the VOO, you have something called the SPY. The SPY essentially mirrors the S&P 500, which is an index that tracks, you know, some of the best performing companies in the US. So as opposed to saying picking winners and losers, what happens when you buy into the SPY or the VOO or the VTI, for example, is instead of me saying, oh, let me buy a Tesla, or let me buy an Amazon, or let me buy a Facebook, or let me buy even two companies that are in direct competition with each other, like a Microsoft and, you know, say an Apple or something that play within the same space. If you're not in the business of picking winners and losers and you don't understand that, you pretty much can buy something that gives you exposure to everything. So you can think of an ETF as a basket, right? As opposed to saying, let me buy, you know, pineapples, or let me buy oranges, or let me buy, you know, pawpaw or something. What you do is you buy a basket that contains all of these things. So essentially, you can think of it also as taking your $500, your $100 and divvying it up, you know, dividing it up amongst, for example, 500 businesses. So that's one easy way of thinking about it, as opposed to picking winners and losers. So typically I tell people that, and there are ETFs here in Nigeria as well. So ETFs, for example, there's some that mirror the entire market. There's some that give you exposure to specific markets. Like you can see a technology-focused ETF. So instead of picking, you know, one technology stock versus the other, if you don't know how to analyze these things, you know, just pretty much diversify. You know, diversify is really, really the game as far as I'm concerned, right? For an early investor, someone that is intermediate, you know, you pretty much just really want to diversify. Rule of thumb for me is like, you know, the younger you are, the more aggressive you can be about stocks. But there are also different factors or different things that go into it. So typically I would say if you're in your 20s, in your 30s, you can invest, you know, as some people would say super aggressive, you know, as much as 90% in stocks, and then maybe 10% in longer term instruments. A simple formula that some people throw around is they would say 110 minus your age, you know, gives you the amounts that you should be investing in stocks, right? So the younger you are, the higher your risk threshold. So for example, you're 30 years old, you know, 110 minus 30 is 80, you know, perhaps 80% of your portfolio should be in stocks because of the sheer, you know, amount of upside that you can have. You can also have downside. So I think you can say, you know, more risk, more reward. But there's also a process to going about it. You know, much older person, 60 years of age, you know, super conservative, should invest in safer instruments and perhaps things that give a fixed return. So have a decent upside, but have like a limited downside. So you might want to do things like bonds, although bond rates in Nigeria currently are, you know, super unattractive. But you want to do something that is much more conservative as you grow older. But as you know, reduce in age, so, you know, younger person, you typically want to think about things from a more aggressive perspective. There are different ways people analyze stocks. Some people are more growth focused. Some people are more, you know, technical. So it's value investing, and some people invest using technology and technical analysis. Value investing is pretty much you saying, okay, I think, you know, XYZ business, you know, is growing at, you know, a very interesting pace. You know, you can think of your Googles, your Facebooks, you know, all of these businesses, and look at the pace of growth. But ultimately, like picking stocks without being too technical about it, I would say you want to look at the management team. That's if you're interested in individual stock picking, outside of some of the things I spoke about earlier, which is, the safer route as a newbie, which is like just investing in ETFs, like the VTI that just pretty much picks the entire stock market, or the VOO or SPY that picks, that mirrors the S&P 500, or like some sector-specific ETFs or something that gives you exposure to gold, for example. If you want to pick individually, you want to first of all look at past history of the business. Has this been a business that has been to some extent consistent? Outside of that, you want to look at management, right? A second thing is like, who is the person that runs this business? What's the precedence of the person? What was this person doing in times past? If the person has been, super successful running some other large corps, that's also a good indicator. Outside of that, you also do not want to invest in similar companies. So pretty much, buying a Zenith Bank, buying a GT Bank, buying a, and doing that across, one industry, because that just gives you much more exposure. So, if that industry pretty much tanks, then you have exposure to like a lot of assets within the same industry. So you want to pretty much, back to what I said earlier, you want to diversify as much as you can, and you pretty much want to pick, as many winners as you can. So if it's the banking sector, pretty much look into who looks like the best bet in the long term. And if it's FMCG, you can do the same thing, and then scale that out across different sectors. Nothing super technical from me. I always advise people like, easiest one is just use ETFs if you're thinking about investing, and that's pretty much it.
All right. Thank you, Tommy. So I have let me be sure. Tunji, are you here? It seems somebody is impersonating you on the chat. So let me see.
Yes, I am here. I am here.
Okay, I'm trying to see who is impersonating you on the chat.
Exactly. I just saw that, and I was I was so shocked. I was like, when did I start talking twice?
Oh dear.
Woo!
Okay, so okay,
Amazing.
fine. Oh, not a problem. Yeah. So Tunji, take it up from here.
All right. So thanks everyone for joining in. Anyway, let's move on.
Just go on, don't worry.
Yeah, I get it. So hi everybody. Mr. Andrews. I run a business called Our Bar, and we generally tend to look at ourselves as a provider of micro financial services across the informal space. Our flagship product is micro pensions, and bringing it basically across to people who, don't have pension savings. Two major reasons why I went into this. First of all, I've been in this space of conversing about financial inclusion and financial literacy for maybe the better part of the last 10 years. Either as a consultant to a few organizations that are pushing financial inclusion, or through my work on radio and TV. And for a long while, I've been a bit concerned about who takes the responsibility of actually making the average Nigerian understand what is important to them as concerns planning for their future, planning for retirement, thinking about tomorrow, or just even understanding the basics of money, the average Nigerian is obviously finding it very hard to survive. We all know what the conversations of today, petrol has gone to 200 plus, or so they say. And then, petrol stations are now hoarding. They're not sure what price to sell the petrol at. It's just a chaotic situation. So at that point, when you're telling Nigerians that they need to save for the future, it becomes a very difficult conversation. And I realize that. I honestly get it. Which of course is why I'm very keen about the conversation of financial literacy, because for you to be able to save, you have to earn enough. I think savings is a luxury for the average Nigerian. And if the average Nigerian is not earning enough, they will eventually spend the money that they earn on taking care of themselves. I mean, this is a country where we come out of pocket to pay for things like healthcare, transportation, every basic thing. So when I was honestly thinking seriously about stepping into the conversation of financial inclusion with Nigerians, I was clear about one thing. And that whatever we're going to be pushing, which of course is micro pensions, we were also going to come with a strong financial literacy arm to our conversations. So we are obviously telling people, save for your retirement, save for tomorrow, save for when you retire. And I'm going to come to the issue of retirements very soon. But I also realized that it is a basket of things. So if you're going to save for your retirement, you also have short-term needs. So while we're selling you the conversation of, save for your retirement, we also want you to be financially healthy today. We want you to be able to think about your future, but think about today, so that at least you even live to see that retirement, which of course is very important. So that is why we've placed the model which we have right now. So we're teaching and also selling financial micro pensions. So what is micro pensions? Let's go into what micro pensions is. Micro pensions is pensions for the informal sector, straight to the point. It mirrors the same system around the Esusu. So if you know what Esusu is in Nigeria, you know that people get to, get their contributions weekly, monthly, daily, and they basically get to contribute as they have money in their pockets. So it's basically flexible. Of course, it's still a micro pension system. It is also a system which, of course, you must know that it was created by PENCOM for the informal sector. And they also realize that the average Nigerian who is in the informal sector needs cash from time to time, either to pay for rent or to, buy goods. So unlike the CPS, which is the contributory pension scheme, which people in the 9 to 5 are exposed to, this you can withdraw up to 40% of your savings at any point in time. Any point you want to, you can get up to 40% of your savings. It is up to you. You can save monthly, you can save weekly, you can save daily. And of course, you get to enjoy the same returns as the people in the contributory pension scheme. So if the larger pool does 40%, you get to do your 40%. If it does 30%, you get to do your 30%. If it does 20%, you get to do your 20%. So it is all the upsides without much of the downsides. So the conversations are simple. Why do you have to start planning for retirement? A lot of Nigerians really do not understand how retirement is such a big deal because we're working right now. A lot of us who are no longer in our 20s felt we're going to be 20 forever. We were so young that we used to take digs at people who were 30, 40, 50, old man, all those kind of quotes and words. And all of a sudden we realize that we sleep and we wake up and we're 30, we sleep and we wake up and we're 40, and it goes on like that. Retirement will come. And if you've ever been around somebody who is about to retire, who has just retired, you realize the amazing weight of anxiety on the person's shoulders for many reasons. The first reason is, what am I going to do with the rest of my life? And two, I don't have any more income coming in. I have not saved up enough. I saw for average Nigerian who's going to retire comfortably in a city in Nigeria, the person needs about $150,000. And remember that this is on the basis that you retire at 65 and then you live another 20 years. So it's going to cover your healthcare, it's going to cover your rent, your accommodation, your feeding, your travel expense if you want to still travel, if you want to go visit kids, your grandchildren, and all the many things. Of course, a lot of Nigerians see their retirement plans as their children. So they try to have 6, 7, 8, 9 children, hoping that one will blow one day. And if that one doesn't blow, and even if the child blows, there's an amazing amount of pressure on that child. We see how it is today for each and every one of us to be able to even cater to our own immediate needs, talk less of an extended family. So that is the conversation around micropensions, seeing that a lot of Nigerians retire, and especially the fact that we have a large informal sector in Nigeria. Our economy is about 70% informal. There's people who are techies who work in a 9-to-5, who are consultants or who are contractors who just go from job to job. We're talking about people who are in the markets who basically sell. We're talking about Uber drivers. We're talking about musicians, actors who do not have a retirement plan. Not because they don't want to, but because there was no system available to them until now. I am one person who has worked in proper 9-to-5s, but I've never worked in a place long enough to be able to have a retirement savings scheme open for me. So every time I worked in one gig or doing a consultancy job for anybody I always had the back of my mind that I had a small troubling, sense at the back of my mind that I don't have a retirement plan. So when I was thinking of going into a business, it just was clear to me. If that bothered me, does it bother the average Nigerian? I put up a poll on Twitter recently, and I realized that there were quite a number of 40+ people who had been working such gigs from gig to gig, who did not have a retirement plan, who did not have a savings, and it wasn't adequate for you to get there and so that is what we're doing. We're going to, our major focus, of course, is the underbanked and the unbanked. Of course, we know that it's easier to reach people who are, for instance, in this room. Situations like this make them understand what we're doing and what they're able to sign up if they choose to sign up. But we have a larger, I would say, mandate or a calling to be able to financially include the those who are unbanked. So I'm talking about your houseboy, your maid, your driver, your gate man, your worker at the office, those people who, by virtue of who they are and where they are not able to have retirement savings. We're trying to include those people. And we're also getting their employers to be able to save for them. 1,000 Naira for somebody who you're paying 30,000 Naira a month isn't too much. 1,000 Naira extra for somebody you're paying 30,000 Naira a month isn't too much, but it gives the person something to be able to fall back to when the person retires. And that is the entire business we're trying to do. It's a very long and hard work. We've already seen how difficult it is, and that is why we believe that hoping that a lot of more people hear the gospel will be able to support us and make sure that we continue to, and most importantly, keep us true to what we say we want to do, and help us get across the line of making sure that there is no Nigerian out there who doesn't have a pension plan and a retirement savings that they can fall back on when that point of retirement comes. So I'll hold back here and take any questions.
Thank you, Tunji. So I'm going to just very quickly ask you if you can tell us in 3 minutes before I call back Tommy. Tell us in 3 minutes how can a startup company utilize micro pensions? What are the values?
Okay, so one of the beautiful things about micro pensions is that it is entirely voluntary. It's entirely voluntary. So what that means is that employers do not have the burden of saving for their employees. I realized talking to a lot of employers, I'm talking about small business employers, they want to give their staff or their team members a pension plan. But because of all the many things that are going on in the startup, they are thinking, first of all, we don't even have the number of people to be able to start that. And two, how heavy is it going to be on our finances doing this? So this makes it very beautiful because it is your team member that signs up for this. Your team member, you obviously can get to sign them on because everybody should have a pension number in Nigeria, a pension ID. It is absolutely free. There's no charge for the pension ID. You can sign up to a pension ID. Your team members can sign up to a pension ID. Then they decide how much they save periodically. Now, here's the beautiful thing about it. Whenever you then grow to the point where you now want to register your company with PenCom to be able to avail your staff the contributory pension scheme, the pension ID we give you is then upgraded to a CPS by PenCom. So it is still the same system. You can't have both. By the laws of PenCom, you can only have one. When you have a micro pension account number, it is then upgraded to a CPS. So you can only have one in your lifetime as a Nigerian. But the beautiful thing about it is that it's absolutely free. There's no money required for you to get one. So if you are an entrepreneur and you have a small team, just talk to us. We'll come in and sign all your people free of charge. Or you can just go to our website at www.awabang.com and then you can sign them up by yourself. Each person can get to sign up and get their pension ID.
Awesome. Tommy, Tommy, can you hear me? You're muted. You have to unmute.
Yes, I can hear you. Yeah.
Okay,
Hi,
great.
Uche.
Great. So Tommy, tell me, you've given us a whole lot of, education on what stock is and what securities are. Do you want to tell us, how people can actually trade, buy stock? I don't want to use the word trade, and I will say why. But can you tell us how people can actually buy stock, especially foreign stock?
Yeah, so there are the easiest or the lowest hanging fruit for lots of people right now is just downloading an app. So there are quite a number of them in the country at the moment that allow you pretty much, from the tap of a button, upload valid IDs like your government issued IDs, passports, voters cards, and all of that stuff, whichever one you have. Fund in Naira, and then a bunch of them do the conversions to US dollars, and also, allow you trade. So they're mobile and web platforms. The one I run is currently called Trove, that's www.troveapp.co. And pretty much, downloading and there are a couple of other options. But using these apps, you have access to, thousands of instruments, stocks, bonds, ETFs, like I spoke about earlier. Some of the fintechs these days offer you access to both markets. They offer you access, for example, to the Nigerian markets, and at the same time, access to the US markets. So pretty much it's just, completing a KYC process. After that KYC process is done, you can pretty much pay with your debit card or via bank transfer. Once you do that, the local currency can be converted to the USD, to USD in this case. Pretty much just pick what you want to trade. There's something called fractional investing. So with fractional investing, you pretty much don't have to own one share. There are some expensive shares. So for example, Berkshire Hathaway stock is very expensive. It's hundreds of thousands of dollars. A Tesla is very expensive. A Google is fairly expensive, considering like how much the average Nigerian can afford to pay. But you can own like 0.05 units of one share, and you can own 0.5, and you can own pretty much whatever you can afford to buy. That's fractional investing, like I was explaining earlier. So it's a very straightforward.
Okay, thank you, Tommy. So I noticed that a lot of people have invested in stock in the past, especially in Nigeria, and then if for somebody who is a startup founder, because one of the things I tell people in the community is that, hey, you know what? There is this thing called inflation, right? Tunji, this is also for you because we're going to talk about, when you talk about savings and pensions, I like to understand how inflation play a role in all of this. Tommy, how does what you do, um, you know, work either against or for inflation? Tunji, the same thing. How does inflation affect what you do?
So Tommy, do you want to go first?
It's fine. You can speak. It's fine.
All right. So inflation is a monetary phenomenon. I was smiling because, you know, I'm my core and I'm an economist. So and I love to teach. I actually do teach a few courses. So I was a bit excited to teach this. I feel ashamed that I'm this excited. I feel very ashamed that I'm this excited. Inflation is a monetary phenomenon, and inflation is a yearly phenomenon. So what is inflation for people who basically might not understand it? Inflation is the rise in prices of goods and services. So it is not, sorry, the percentage rise in percentage rise in the price of goods and services. So not generally the price, but the percentage rise. So for instance, it was a tin of milk was 10 naira before, it increased to 11 naira. The increase is 1%. So it's not generally that it has gone up to 11 naira, it is that percentage increase between 10 and 11. So what does that mean? If you have an economy like ours, that factors of things like petrol, things like we do not have a lot of storage, we do not have a lot of, and what I mean by storage is that when you don't have storage in your country, prices of food gets to fluctuate day to day, if you get what I mean. But if you have storage, prices get to stay stable for a long time. So what that means is that a country like Nigeria will have volatile inflation. Now, coming to your savings, if you are saving for long term, you must also spread out your conversation around, you must also spread your conversation of inflation and also devaluation, which I will come to shortly, over the long term. Inflation happens yearly. Get me, yearly. So if you have a savings, if you have a buy a share portfolio, or let me just say, for instance, you buy Tesla, you get, and I don't know, Tesla goes up, I don't know, maybe 10% this year, and you do not sell your Tesla, it goes up another 10% next year. You do not sell your Tesla, it goes up another 10% the following year. Note what is happening is not that your initial amount is growing up 10% every year. It is a new amount at the end of the year. So let me just quickly explain it, I guess. So you have 10 naira at the beginning. So it went up 10%, that goes to 11 naira. That I'm talking about your investment now. The next year it goes up 10% again. What you now have is, instead of 12 naira, what you will have is the 10% of 11 naira. You get what I mean? So what you'll be adding to your 11 naira will be 1 naira, 1 kobo. So what you are going to get at the end of the second year is 12 naira, 10 kobo instead of just 12 naira. That is the principle of compound interest. And that is why we always try to tell people to invest over a long period. Now, what that means is that if you spread the factor of inflation over, say, 8 years to 10 years, in Nigeria, for instance, if you add devaluation plus inflation, the effects of over 10 years comes to about 10%. If you are not looking at it as a single year event, if you are looking at it as a long-term event and you are saving over that long term, it comes to about 10%. So if you have, investments that are doing over 10, 12, 13%, you are safe. Problem is, if you are a speculator and you are not able to speculate enough to be able to cover the effects of devaluation and inflation, then it will affect your money, because those phenomena are yearly events. Also, I mean, the issue of devaluation will come up, but we do not devalue every year. I think in 2019, the Naira was probably the most, one of the most, the best performing currencies in the world, because our central bank didn't even allow it to move at all. It just did not move. So it was one of the best performing currencies in 2019. So if you stretch that over a period of 10 years, what you realize is that the long-term effect of devaluation on the Naira comes to about 8% per year. Then if you add inflation to it, it comes to about 10, 11%, if you get what I mean. So you need to think about your investment from a long-term perspective. But if you're thinking short-term, then you must be at least thinking 40 to 30% returns on your investment. That is why if you go to, some developed countries, you realize that they give you small interest loans over a long period of time, because over that long period, they're able to make all the money from you, as against if you come to a Nigeria and then you want to borrow a 3-year loan and they say that your interest is going to be 27%. Because they know that they have to cover for things like devaluation, inflation, and all the other issues that they have. But if they were going to spread it over maybe 10, 20 years, the interest could come to about 4 or 5%. So basically that is it. So if you're investing long-term, you should be able to think and you are covered from the issues of inflation and devaluation.
In other words, your pension savings is not affected by inflation, neither is it affected by devaluation. That's what you're saying. Okay,
absolutely,
great.
it is not. Absolutely, it's not. As long as your PFA is returning at least 15% per year, as long as your PFA is returning over 15% per year, you're more than fine. Actually, you're more than fine.
Okay, cool. Tommy.
Yeah. Hi, Uche. Yeah, so pretty similar perspective, right? And then when you say, or from my vantage point, when you say inflation, easiest way of thinking about it is, an increase in prices, right? And a fall in the purchasing value of money. And both of them, they're directly correlated, when you're using the context inflation. So things go up, the prices of things go up, but what you can actually buy, with the same amount of money, goes down, right? And if you look at historically, like in Nigeria, for example, I think in 2019, inflation rates were somewhere around 11%. And I know in 2021, I think it's somewhere around 12.6, I think 12.6%-ish. And so that just gives you some context into, what you could buy in 2019, same quantity is not what you can buy in 2021. And if I were to tie that back to equities, you pretty much need to be investing in such a way that, the returns that you're making off the investments, can cover for the inflation, right? And so if you're making anything that is, sub-inflation rates, then, if you're looking at the time value of money, that is not pretty much the best investment to be in or to make. And that's just pretty much how I think about it. Devaluation is a whole different topic on its own. Awesome. That's a different one on its own.
Okay, great. I asked that question because a lot of people see investing in stock, for instance, as one way to hedge against inflation, especially in foreign stocks, right? They look at the fact that Naira is both inflation and devaluation, actually. So they look at the fact that Naira gets devalued a lot more often and against the other global currencies, especially the dollar. And so if you invested in stock, for instance, and it tends to help you preserve converting your money to dollar and investing in stock tend to help you preserve the value of the money over a longer period of time. And that's what I wanted. I was hoping you could speak to and help us understand that concept a bit more. So between Tunji and you, whoever has a better understanding of that issue, would you want to just make comments around that?
So can I help with this? I want everybody on this call to remember that we have foreign investors on the Nigerian Stock Exchange. Actually, foreign, what do they call them? Portfolio managers own about 50% of the Nigerian Stock Exchange. They are coming from countries of relative stability. They're coming here anyways. And we need to ask ourselves why that is. And the answer is pretty simple. And do not forget that they also have to come, battle with things like, charges to bring money in, charges to take money back out. And some of them are even stuck in Nigeria as we speak, and they can't take their money out. But they still keep coming. You must ask yourself why that is. And the reason is simple. In those countries that you're going to, in those economies that you're going to, what are the returns that you get on your stock portfolio in those countries? They're a lot smaller, but the effects of inflation also are a lot smaller in those countries. So give or take, in those countries, if you have, 3 to 5% to 7%, 3 to 5 to 6% every year, you are relatively fine growing your portfolio that way. But of course, you know that inflation in those countries are usually around 2%. So it's fine. So maybe you come with about 3 to 4%. If you come to Nigeria and you're able to do, 25% with your portfolio, and then you remove the effects of inflation, let's say the inflation rate is, 14%, 16%, and then you are able to, there's a devaluation that year of another 5%. It still comes to the same exact 3 to 5 to 6% you would have gotten if you had your money outside. So while of course I do not knock buying shares or putting your money outside, I think it's a way to diversify your investments, because when the Nigerian market is not doing too well, the foreign markets are doing well. When the foreign markets are not doing too well, the Nigerian markets are doing well. So it's the thing, and this is one of the things we try to teach at Awaba. You must have a full understanding of how money works and why you must have a diversified portfolio. So in your portfolio, I always advise that you should have what Tommy spoke about, an ETF. In Nigeria, our market calls it an equity traded fund. So what it is a basket of funds cut across some sectors, which of course it gives you a weighted average on the stock market. So if the stock market does relatively about maybe say 20%, your portfolio should do about 20%, give or take. So the idea is you should be able to have some shares in Nigeria, some investments outside Nigeria, some investments in debt, some investments in equities. So spread in such a way that you are covered on all areas. And that is one of the things why pension funds are very diversified. So pension funds in Nigeria are so sophisticated that they are trading in equities, both in Nigeria. They are trading in debt markets in Europe via Euro bonds. They are trading in, they're trading in the debt market in Nigeria. In fact, as a matter of fact, pension funds are the single largest domestic investors in Nigeria by far. So the idea is, when you're thinking about investment, understand why all of them are important as against thinking one over the other. Everyone is important to help you have a balanced portfolio so that net at the end of every year, you're still ahead as against focusing all your eggs in one basket and not being able to get ahead at the end of the day.
All right, thank you. Unfortunately, we've run out of time. I will just say to everyone on the call, if you have If you have questions, you would want to just raise your hand, and we can take a few seconds, and I can let you ask a question, right? But other than that, Tommy, what would be your last words?
Okay. I think for me, I pretty much tell people, like, don't think about, investing from a perspective of, oh, I would do it when I have a lot of money. Nowadays, there are lots of people that are trying to democratize, investing. So you can do it with as little as 1,000, even 500 naira. And so it's not a 100-meter dash. You can think of it more as, a marathon, or, something that you do continually for the rest of your life. We spend money on a lot of, silly things as human beings. And so what you want to do is, think more into the future, create some structure. Like I always tell people, like, consistency is the game. You don't just put 1 naira today and put 2 naira next 2 years. You really want to do that consistently. And at the same time, you really want to do that in such a way that when you put into cognizance, things like compound interest or compounding, it then begins to make sense in the long term. So draw a budget around the way you spend, and put just a tiny amount, after your fixed expenses. Cut your coat according to your cloth. Do not spend extravagantly. Remember, there's always a future. And, whatever that percentage looks like to you, to one person, it might be 500 naira, to another person, it might be 50,000 naira. Pretty much consistently invest for the long term. And do it in, instruments that make sense to you based on your, risk profile, your age, and, time horizon around all of these things. But for me, like, I always preach consistency. Like, even if it's 100 naira, like, just do it consistently over time. Little drops of water, make the ocean. So that's pretty much parting words from me.
Awesome. Tunji?
So, like I said earlier, a report says that you will need about $150,000 to be able to retire comfortably. $370-something thousand, which comes to about 150 million to be able to retire comfortably in a Nigerian city. The question is, and the question I've been asking a lot of people is, do you have that money in your bank account today? If you do not have that money in your bank account, you want to ask yourself how close you are to that retirement age. If you're 40, you only have 25 more years. If you are 20, good for you, you have 45 years to do it. But if you break down 150 million naira, aside your day-to-day expenses, you want to flex, you want to buy a car, you want to look nice, you want to, do all those other things, you realize that it takes a long-term planning for you to be able to do that. And the honest truth is that for you to be able to do that, you have to start today. The big thing about the micro pension system is that it helps you be able to do it with as little as you have. If you want to put aside 500 naira this month, it's fine. Nobody's going to flog you. It is your money. If you're going to put aside 1,000 naira this month, it is fine. It is your money, as long as you're consistently going towards it. And I think also seeing the money grow will be able to give you some impetus and maybe a little bit of, what's that word? Inertia to continue to push forward towards having a beautiful retirement. If you've ever seen any of those people who are old, poor, and speak very good English and were very top in their industries when they were younger, you would know that retiring without having a proper pension plan or a proper retirement is one of the worst things that can happen to anybody. That is basically it. Thank you very much.
Thank you. Thank you so much, guys, for showing up. Thank you for everyone that joined. Sorry, I had to shut down the chat earlier on because someone was trying to just be funny on the chat. So
I was worried when I saw that.
Yeah, so you can still chat. I mean, the chat is still open, obviously. I thought I actually shut it down, but the chat is still open. So thank you guys for joining. Thank you, Tunji, for coming. Thank you, Tommy, for coming. We hope to stay connected, and hopefully we can have another time. Where can people sign up for your systems? Do you want to type in the chat?
Yeah, I'll do that.
So guys, I'm going to just share a couple of announcements from our end. So we go here. I just did this before we all jump off. Just to remind you guys, the communities are coming live. The city communities are all coming live. There are a lot of things coming on that you should be looking out for. So if you want to join the StartupSouth community in any city where you are, please go to bit.ly/join-s2c. You will get an invite to join the Slack channel, and then you get to connect with other founders across the region. Okay, then and then you know when your city is when we are activating your city, and of course we're streaming live as we speak. We stream live all our sessions. Today is an exception. Today we allowed everybody coming on Zoom, but typically every time we do this, we stream on our YouTube channel. So if you're not subscribed, you can do that on bit.ly/startup channel. And there are a lot of other things there that you videos and educative stuff that you can watch on our YouTube channel. Then we send out a weekly newsletter to our community. So if you have opportunities, if you have information you think we should pass on to our communities, please submit to WebThread, bit.ly/submit to WebThread, and we would review and include it in the community newsletter. If you're a startup in the community, we have a space on our website where we showcase the startups in our community. So startup bit.ly/SS showcase, please do that. Then if you're a hub, the same thing. And before we leave, let me remind everyone, the partnership with NextPod is still on. There's opportunity for 50% scholarship for at least 3 months, monthly scholarship for at least 3 months for five learners. And then you get the entire application fee waived. That's like a 10,000 naira value that you get if you are looking to study with NextPod. So by virtue of StartupSouth, so send a message and I'll share that information. Unfortunately, we haven't included that on this slide, but I can share the link. bit.ly/SS scholarship. So if you want that, so bit.ly/SS scholarship, I'm going to put it on the chat so you go see what it is. So that will be that from me. Thank you everyone for joining. Thank you to our speakers, and thank you everyone. I saw my Oga. I call him Oga, and Anedi, thank you for joining. I don't know if you've left. So I'm not sure he wanted me to mention that he's here. Anedi, thank you for joining all the same. Anedi is from Google. Thank you for joining this session. All right, thanks everyone for joining. See you again. The last session, we won't have a session next week. We're going to have the last session for the month and the last Friday of the month. Hopefully, we're going to be having someone very interesting, and I'll tell you a bit about him on our social media handle. I'm not going to say it now. Thank you. So you get more details on the social media handles. Thank you everyone for joining, and do have a great weekend ahead. Oh, community members, we have Creative Hustle tomorrow, and then there's AI meetup tomorrow as well in the hub, at the Future Square hub. So guys, we have Creative Hustle. It's virtual. Go on our website and get details, event.startupsouth.org, and get details for Creative Hustle in partnership with British Council. Okay, so everyone, Creative Hustle comes up tomorrow. All right, have a great weekend. See you tomorrow, and then do have yourself a beautiful evening. Thanks, guys.
Thank you.
Yep. All right.